I'm John Jenkinson. Thank you very much for joining us on RFD TV and the Rural Radio Channel 147 on Sirius XM. Earlier, Marlon Bowling was talking about this corn market that was on the lower side by anywhere from about 3/4 cent all the way to about a penny and a quarter. Well, let's look right now. That front month of March is down 1.5 at 388.5, but that's still off of the low at 387. So we're a penny and a half above it. The May is down 1 3/4, so is the July. Over in the soybean market, the front month is January. It's down 1/4. The March is down 1/2. The May is down 1/2 at 953 3/4. So the row crops are just slightly lower. Now for the Chicago wheat market, a little different story here. March down 7. The July down 5 1/4 at 553 3/4. Kansas City wheat market for March down 5 1/2. That new crop is down 4 1/2 on the July contract, 476 3/4. Brian Hoops, Midwest Market Solutions here, and he's based in Springfield, Missouri. Brian, this pullback here in the wheat market a little bit, you read much into this, or do you read this as maybe a little bit of profit taking, or just the market taking a breather? You know, we've run that market up quite a ways here over the last 3 or 4 sessions.
Yeah, we sure have, John. Good to talk with you. I think this market here is, kind of setting back without any real positive news. The fund buying and fund demand that has driven the corn and soybeans and the wheat markets higher over the last 4 to 5 trading sessions really not showing up today. And without their buying interest, the market is just setting back. We're getting into that holiday mode here where volume slows down quite a bit. It's pretty easy to see exaggerated moves because of the lack of traders and the lack of volume to take the opposite side. So it is I think, just mostly a profit-taking session. We don't have that big of a change in fundamentals, and with the U.S. dollar index higher today, that is encouraging some weakness in the wheat market.
Over on the ethanol report that we saw earlier today that was released, Brian, we saw a little bit of a reduction here in the production over the last week. It was down 8,000 barrels per day, 1.064. The 4-week average is right there at 1.164, and the ethanol stocks were basically unchanged, 21.8 million. So, and a drop in imports. So do you think that this ethanol story, if we would get phase 1 signed with China, would continue to be an evolving fundamental that could drive a little bit of higher side over here for the corn market?
Yeah, absolutely. I think it'd be a positive fundamental. One of the things that China would buy from the U.S. is DDGs, and that's certainly going to be supportive for our ethanol production. This was the first pullback in production in the last 12 weeks from the previous week. So it's still a positive number. It's above last year's same week production, and our stocks are not building. They're virtually steady right around that 916 million gallon level. We're hearing more talk about some of these ethanol plants that were idle last summer and early fall now starting to come back online, maybe even half shifts, but at least they're starting to come back as their margins are improving again. And as you mentioned, with the Chinese agreement, I think we're going to see a little bit better time for our U.S. ethanol industry.
Okay, Brian, stick with us. We're going to take a break. We'll come back. I've got some questions about over here on the livestock side. That's straight ahead. Stay with us here on the Market Day Report. Before we get back to Brian Hoops, first of all, let's look at what's going on in the futures market. Live cattle are watching to see what will happen with the cash trade yet. We've got a cattle on feed report that's going to be out on Friday. Right now, that front month of the December is up 33 at 122.55. There is more volume here over in the February contract. It's up 10 at 126.40. April's up 20. Some of those deferred contracts are down anywhere from 5 to 10 cents. Now, in the feeder cattle side, it's a mixed bag. January up 15, March down 7. You go all the way out to August, though, and we're up 8. Now, in the hog complex, it's also mixed. February up 38, April up 15, May down 13. Brian, I did see where on the Fed Cattle Exchange we traded 268 head out of 898. Most of that was done at 120. And according to the numbers that I kept from last week, looks like that could be better money than we had last week. Does that set the stage for this cash cattle trade, you think? Or do you think we're going to wait until that cattle on feed is behind us?
Well, most likely we're going to wait till a little bit later in the week before we get much in the way of movement, but I think it certainly is a positive step in the right direction. A higher dollar higher than last week's trade that does set a positive tone, especially feedlots that are already asking like 122. I think they'll kind of dig in their heels at this point in time. Futures starting to stabilize, waiting for some some cutout values to come out, but I think, with a smaller show list this week, I think we are poised to see that steady to at least a dollar higher type of growth by the end of the week.
That cattle on feed estimate shows quite a wide range over there in the placements. Do you think that the trade is basically expecting some kind of a benign or uneventful type kind of a cattle on feed report? Because it'll be not only will it be a shortened trading next week, they'll have all weekend to think about it. And a lot of traders have already taken off for the Christmas holiday.
Yeah, this is the last full week of trade, of course, with the Christmas and then New Year's the next week. So, yeah, a lot of traders kind of just shutting their books and going forward. The cattle, they may want to stick around for the cattle on feed, maybe trade that early on Monday morning. But after that, it's going to get very quiet, very silent, good time to take some much-needed vacation time. But that on-feed report that you mentioned, it is looking just a little bit of negative numbers with the on-feed numbers and placements a little bit larger than year-ago levels. The marketing effort, I think, is underrated. I think we did market a little bit more cattle than that, and that should show up as a positive factor.
Brian, always appreciated. Mr. Brian Hoops with Midwest Market Solutions. Christina, as we move on, and we've got the cutout information going to come out here in just a little bit.
Okay. Thank you, John. Appreciate it.